Hi, and welcome back to this channel. Today I'm going to show you something a bit different. It's an artificial intelligence tool that can actually act as a financial advisor. It can generate full detailed reports using the most recent financial data, and all of that without writing a single line of code. Now I know what you're thinking. This is probably just another language model that is summarizing general public information and presenting it as a financial report. But that's not exactly what's happening here. There's something very important behind this tool that really makes a difference. It actually has access to the latest paid institutional grade financial data, and this changes everything. It means that when you ask it about something like Apple stock or gold or crypto markets, it's not just relying on public data or generic knowledge. It's able to access high quality paid data sources, run an actual analysis pipeline, and then generate a structured report. So this is not just text generation. This is analysis based on real data. Obviously, it goes through a language model to generate the report, but we are not relying on the information that is already present in the language model itself. For example, the platform is connected to data providers like Financial Modeling Prep, Keiko, and CoinGecko. These are not free sources. These are professional grade data providers. So when you ask a question as a user, related data is streamed live from these sources and then analyzed through a well-designed pipeline. And the important part is that you as a user, you don't need to subscribe to all of these data providers individually. This would be obviously relatively expensive, but you do have access to the information through the platform, which is CoinQuant. And you can actually try this for free. We're going to test it quickly together in this video. We're going to generate a live financial report, but if you want to explore it on your own, I'll leave a link in the description. They offer a free tier membership, which is of course limited in terms of number of prompts per hour, just so you can test the product and understand how it works. Obviously, if you need to apply more intensive usage, they also offer an upgraded membership system as well. So think about it like this is an AI tool, a financial advisor that is backed by real market data. And that's exactly what we're going to explore in this video. So this is the platform. This is CoinQuant. Today, I'm interested in gold, considering all the news and what's happening around the world. Let's see what AI has to say about this. So I'm going to type my prompt here. Give me. And by the way, this is also for backtesting. The platform can also backtest your strategies if you describe these here in the prompt. This is what we've presented in the previous video. But for now, we're interested in the financial advisor. So today I'm interested in gold, as I've mentioned. So give me a full investment analysis of gold right now, including, let's say, macro context, liquidity, and risk factors. So this is a basic report, including these details. I'm going to put commas here just in case, although I know language models don't care much about these. And this is my first sentence. I'm worried about the events happening around the world now. So I want to take into account the current geopolitical situation, considering that my account is in US dollars. Okay, so I'm going to run this. So it's combining macro environment, price behavior, liquidity, and market sentiment at the same time, and turning it into one structured analysis. We're going to give it a couple of minutes because it takes time to gather the data and generate the report. I'm going to pause my video right here, and then I'll get back to you. Now the report is finished. As you can see, I'm going to make it a bit more visible for us. I want to highlight the size of the information, the volume of information that you can see here. So this is more than what any trader can digest at once. I don't know about you, but this is a lot of information, but it's presented in a very synthetic and a beautiful way. It's divided into sections. So here we can see the investment decision contract that you can actually minimize. For example, you have the current snapshot, the price performance, and so on. I asked the model or the pipeline for geopolitical risk analysis as well. And this is also a section on its own as presented here. So we can see that, for example, we have Russia-Ukraine war, the status, stalled diplomatic talks, Trump admin optimism abandoned, then the gold impact safe haven still, demand elevated, and the intensity is high. It's affecting the price gold a lot. Then we have the Middle East conflict now. So we have the US-Israeli strikes on Iran as well. It's a very high impact on the safe haven, which is the gold. We have the US-China trade tension as well, which is also systemic risk, so gold demand, and it's also a high. We have a very high intensity parameter, which is the de-dollarization trend, as you can see. So we have all of these news that can influence the gold price versus the US dollar. Remember that I mentioned in my prompt that my wallet is in US dollar, and this is why it's comparing anything that's related to gold and US dollar news. And then it gives us a small summary that we can read here. So if you don't like this table, you can also read the summary in text as well. And we have other sections. I was mostly interested in why is the gold striving now? What is the parameter? What are the news that are driving the gold prices up? And this is what I got here. This is my answer to my prompt. But then if you want to invest in gold, is it still good to invest in gold? We have to read more about it. So the investment decision contract maintains strategic long exposure, accumulate on pullbacks towards, let's say, 4,250 levels, 4,350. This is a strong support zone, apparently. Near-term volatility elevated. The horizon is 6 to 18 months. This is really amazing. It's giving you some advices where you have strong supports, where you can buy. Don't buy high, you can buy low. And what is low? It's actually providing you the retracement levels or the support levels. Then the driver, it's providing what is the main driver at the moment in summary. And then the key risks as well, because you always have some risk. And the confidence of this report, it's around 78%. So this is medium to high confidence. You have some keywords here. We have a safe haven, inflation hedge, de-dollarization play, and US dollar account. So this is based also on the prompt that I provided at the beginning. The snapshot section gives an overall view over the market. So we have silver, we have the platinum, we have crude oil, and so on. You also have the price performance of the gold during the last day, 5 days, 1 month, 3 months, 10 years, and so on. So you can see how it's behaving through time as well. Now, if you like price action analysis, you have it here. We have the pullbacks, the strong support and resistance levels. Everything is mentioned here, mainly the main drivers of the price. And if you like macroeconomic context, you also have a detailed report here. So mainly everything is pointing towards a bullish direction, as you can see. So you have neutral or bullish. So it depends on what we are looking at. Then we have the Fed Reserve strategy and the rate outlook summarized here. We have the active geopolitical risk factors that we have seen, the summary of the risks here, geopolitical actions. And then we have the central bank and institutional demand. So you have all the parameters here. And also a summary here. If you're not very familiar with these numbers and you don't know what they mean, you can read the summary and the explanation and how you can leverage these numbers for your investment strategy. Then we have a liquidity assessment, which is also important. And here you have the liquidity risk note for US dollar accounts. So as you can see, depending on which currency you are having your wallet or your account to trade from, if you have euros, it's going to be different. If you have dollars, it's going to be slightly different, and so on. This has to be mentioned in the prompt so the pipeline knows what is your base currency. So this is, again, a risk factor dashboard for a US dollar account. If we have a geopolitical de-escalation, for example, which is very unlikely at the moment, according to AI. So that's 35%. Remember, this is based on the news from the data and from the web as well. So it's probably unlikely that's going to be any de-escalation at this point. But anyway, in case of a de-escalation, obviously maybe the sentiment of the market would be to sell gold and buy US dollars. So the US dollar actually would be climbing back up a bit, and which would make the prices of gold drop slightly. Even something that's very funny, nice, actually, you have scenario analysis, 12-month horizon. So bull escalation and Fed cuts, let's say probability 30%. The price target is 5,000, 5,600. The key trigger would be geopolitical escalation, plus Fed cuts, plus US dollar weakness, and so on. And this is really cool, actually. It's giving you a scenario 10 months from now. What's going to happen? What's the most probable scenario? And what is the target price? Now, I'm not an expert on these fundamental economics and financial news and so on. I'm more of a technical person, but I find this very interesting if you're looking for an investment approach rather than day trading and technical analysis and so on. Then we have the institutional price targets for 2026, JP Morgan, Morgan Stanley, UBS, and so on. Targeted prices for 2026. As you can see, you can read those prices, check the news and other targets, and you could have an idea where the gold is going to head according to the data that's available today. Obviously, we can't read the future. You can't know everything. But with the data that's available today, what might be the possibilities for the near future, for the next 12 months? So as you can see, in terms of risk, it's also very transparent. The main risks are a stronger dollar, higher real interest rates, or a drop in demand at these high prices. So it's not just telling you buy or sell gold, it's telling you why, where, and what could go wrong as well. For the sake of keeping this video short, I'm not going through the full report, but as you can see, there's a lot of data here. There's one important point before we wrap up. This tool is fully transparent about where the data is coming from. So it's not just giving you an answer, it actually shows you the full data pipeline behind it. You have the calculation actually as well, if there has been any computed metrics in the pipeline. You have the data fetch log, the validation spot check, and the source trail, and the confidence and the quality of each of those source trail and data provenance. And on top of that, it actually provides validation points. So you can go and verify things like the gold price, the dollar index, or ETF returns independently. And this is something I really like. It's also transparent about the limitations of the data and any gaps within the data. It tells you what is missing, for example, options data, ETF flows, or positioning data. So again, this is not pretending to know everything. It's giving you what it knows, where it comes from, and what is missing. And yeah, so this is the big difference here between something that sounds smart and something that is actually built like a real financial analysis system, or at least as close as possible to a real financial analyst. Now, of course, as always, this is not a real financial advice. It's an AI tool. It's for educational purposes, and you should always verify and validate the information before making any decision. Even AI can make mistakes, although this tool, as I've already mentioned, is really mind-blowing for me. And that would be it for today. I hope you found this information helpful. Until our next one, trade safe and see you next time.